Bit of a stability coming through for the rand. So we had it trading down around 696, 697 just a short while ago, going up to R7.05 yesterday. But it looks like the euro's also stabilized a little against the dollar.
Morning, Stephen. Yes, yesterday we had worse than expected manufacturing data out of the US. The dollar consequently weakened, and in response we saw commodity prices start to firm up. So the rand improved on the back of that data. Just goes to underscore or highlight how much the rand seems to be tracking international developments at the moment, particularly the dollar and commodity prices.
We also had a bit of good news coming out of the Eurozone yesterday, so it looks like a bit of a reprieve over there where finance ministers have approved an emergency loan program for Portugal. It looks like Greece is going to get an extension to some of the loans that it is getting from the EU and IMF, but I'm sure this is going to continue playing out in the Eurozone.
Yes, Stephen, that certainly is our view, and we've been saying for some time that this euro crisis isn't going to be resolved in the short term. Yes, the euro did recover a bit yesterday on the back of that good news, but over the longer term we still see that euro-dollar rate headed down to about 120 until this sovereign debt crisis is resolved sort of once and for all and definitively closed.
Well, you said those international developments are really going to be moving those currencies. How about some of the local factors? Because we have some data out today. We have CPI. We chatted about it yesterday. I think you're in line with market consensus, 4.4% for April year on year, up from 4.1% in March. Do you think this could be market moving for the currency if we do see it beating those expectations?
Actually not given current market environment, Stephen. What we had last week was a relatively hawkish statement from the MPC, and despite that the rand continued to weaken. So as far as the rand movements are concerned, we're actually not expecting the currency to respond much to today's data. We have CPI out, also have retail sales, but in light of tomorrow's holiday and in light of the rand's non-reaction to last week's MPC statement, we think that it'll probably just continue to be driven mainly by what happens to the dollar today and also what happens to commodity prices.
Well, just to recap on those retail sales numbers, the previous reading 5.6% for February. I think Standard Bank, you said you were looking for a growth of around 6%, so a slight improvement in that February number.
Yes, we would certainly be hoping to see a rebound in sales. Could be distorted by the fact that there was a public holiday in March and therefore a shorter number of trading days in the month relative to last year perhaps. But yes, we are expecting and hoping to see a rebound in retail sales up to about 6% on a year-on-year basis.
Having broken back below that 7 rand mark against the US dollar, do you think we could see further strength coming through for the rand in the short term?
Certainly the risk does lie in further rand strength at this point. As we mentioned yesterday, the rand is looking a bit oversold, so we could see it retrace to about 684 in the short term. But over the medium term, the bias is still firmly in favor of rand weakness, and so we'd be expecting to move in the direction of north of 7 rand in the next few weeks.